Hey everybody, welcome to the Route Consultant Weekly Webinar. My name is Josh Gregory. I'm the Vice President of Education here at Route Consultant. For those of you who've never been here before, I manage a few different things here, but my main goal is helping new investors understand the space as they're getting into it, and then helping existing contractors as they're working in the space find ways to operate more efficiently, be more successful every day. So for all of our regular attendees, welcome back. And whether you're brand new here, you come here every week, we always want to make sure that this is a webinar and a place that we can come together, learn, ask questions, and use this time to get better together. But before I go too far, I do have to do my quick disclaimer and read it as I do every week. So Route Consultant is not endorsed by and is not recommended by Federal Express Corporation, FedEx Ground, or Amazon. Route Consultant is not sponsored by, is not approved by, is not associated with, and has no connection whatsoever with Federal Express Corporation, FedEx Ground, or Amazon. Now, the way the webinar is going to work today, if you've never been, so we're going to go over some content. I'm going to give some updates on some events and new listings out this week, and then we will open it for a pure Q&A. So any questions you have, whether it's something that we talk about today or just any questions you have about the space, we're going to be here to answer it, and we'll do that at the end. Just make sure if you want your question answered, you put it in the Q&A button at the bottom. If you put it in the chat button, I will not see it. So if you want your question answered, put it in that Q&A button. So for this week, whether you're buying a FedEx business for the first time or you're looking to make just additional acquisitions in the space, your goal here is to get the best deal and speed up the process as much as possible as the buyer. And that's what everyone wants, but there are a few really important things that you can do to differentiate yourself as a buyer and significantly smooth out that process. So what I did today is brought on Danny Robinson to help talk through what we look for in a buyer and what you can do as a buyer to separate yourself. So Danny, if you want to come online and kind of jump into it. Let's see. There you are, Danny.
Hey, everybody. Glad to be back with you again. Yeah, I'm really excited to talk about what makes you a better buyer, because better buyers make me a better broker, and that makes everyone's life easier, right? So when it comes down to it in the FedEx ground space, what I would say the three most important things for a buyer to be able to bring to the table are the following. A realistic understanding of their personal financial statement and what they're capable of financially. A realistic understanding of what the FedEx ground business acquisition process looks like. And more importantly, what the day-to-day life in a FedEx ground contractor's world looks like, so that they can understand from an operational level what it is they're going to be taking on. Because all of those are going to be very relevant factors when the most important piece of the entire acquisition puzzle comes into play. And that's the FedEx approval process. That's what all of the educational content that Route Consultant can provide to you is really geared around on the acquisition side, is getting through that assignee interview meeting, the AIM, as we call it so lovingly with all of the wonderful acronyms we have in this space. The AIM, it is so important to this process because of all the different moving pieces that we have involving involved inside of these deals. The wild card that I have the least control over is FedEx ground. So knowing your financials, knowing the acquisition process, and knowing FedEx ground at a high level is how you're going to differentiate yourself as a buyer in this space. I'm going to tell you a little bit about how I would envision you guys wanting to go through and exerting those things into a deal structure yourself. So when it comes to the financial side, I think that this is a really important one. When I say that you need to understand your personal financials and what you're capable of in an acquisition, I think it's a really valid and important thing to bring to the conversation, because if you're someone who comes to me with a purchasing power of around $500,000 to $700,000 and you've got your eye on a $7 million line haul business, there's going to be some give and take we have to make in that situation, right? So having a realistic expectation about what you can achieve in getting your foot in the ground with FedEx ground is so crucial to the process. We can give you all the tools that you need to grow your business from there. Just getting your foot in the door does not mean that that's where the journey is going to stop for you, or that you've hit some sort of imaginary glass ceiling. There really is not a glass ceiling that we've discovered in the FedEx ground space, and we've been pretty high up in the stratosphere with this ecosystem. So there's ways that just understanding your financials at a high level, knowing that your personal financial statement is going to support X number of dollars as far as the purchase price is concerned. It's crucial. It's really, really important. And on that note, I mean, just being honest and upfront with your broker on where your financials are at, it's going to empower us to go into the negotiation process, knowing exactly what thresholds we're able to get to, where we can push the boundary, where we can't. And it's going to make the deal structuring process that much more realistic and productive. And it's going to waste a lot less more of everyone's time in that regard. So on the financial side, just like I said, understanding what you're capable of, knowing what the business is worth, what you're capable of borrowing as far as acquisition dollars are concerned, that's the most important piece of it as far as that's concerned. When it comes to understanding the FedEx acquisition process, this is a multi-pronged effect, right? Or approach that you're going to have to take here. There are so many things that go into acquiring these businesses. These are dynamic operations, and there's a lot of moving parts to them. And we have to make sure that you understand each and every one of those parts at a pretty high level to be able to gain FedEx approval to acquire these businesses. So shameless self-plug here at Route Consultant, one of the words in our name is consultant. We have a full-scale consultancy here in-house. And on the buy side, we have a couple of products that are really specialized and focused on helping someone who's in the position of a new investor to this space to, empower themselves with some educational content, vendor relationships, having a designated consultant and someone here in-house to work, with you on putting things like your RFI, your business plan, and your peak season strategies together. Those may be terms you're not familiar with, but that's just all the more reason why you should engage with us on the consulting side, because we can help you accomplish all of those things step by step, give you a checklist, let you know exactly where you need to go each step of the process, and make sure that you're set up for success in gaining FedEx's approval in your acquisition efforts, right? And then on the operational side, just like knowing the acquisition side with FedEx, understanding how these businesses operate, like I just said, they are dynamic businesses and they operate nonstop. There's 4 or 5 days a year FedEx gives you off for certain holidays, and that's it. Other than that, rain, snow, sleet, shine, whatever, the expectation is that you get the work done. Understanding on an operational level how important each different part of your day is as a contractor, as the AO of one of these businesses. We also have the tools to help you understand that at the same high level that we can give you acquisition education materials. So those 3 pieces coming together are going to make you a more qualified buyer. The one thing that I feel like we run into it all the time on the sales side in this business, in the brokerage world that we live in, where there's certain expectations that a buyer has, certain expectations that a seller has, and somewhere in the middle is where reality lies. And just trying to keep in mind how, like I said already a few times, not to beat a dead horse, but how dynamic these businesses are, how involved each step of the process is in acquiring these businesses. Just being patient, being well learned and educated in the space in the acquisition process, and not having unrealistic expectations or even desperate expectations on the timeline and how you're going to wade through this is going to make you that much more potent of a buyer. One thing that sellers tell me all the time that they want is someone who can go into the terminal, interview, and get the yes. Because as you'll find as you go through the process of learning about these businesses and potentially acquiring them, is that the sellers do take on a significant amount of risk when they alert the terminal to a potential sale of their contract. So they don't want to go to the terminal and raise those alarms and say, hey, I've got someone that can come in that I'm thinking about selling my business to. And then you go in and absolutely bomb that interview. It makes the seller look bad. It makes it puts you in a very difficult spot trying to get contract approval moving forward. And and then there's a big target on the back of the seller now, and the terminal knows that they're looking to move on from the contract, and that puts them in a situation where they may not be able to grow as they're pursuing a sale as they might have been able to had you not failed that interview, right? So those are the real big pieces that I have in mind when I think about how are you going to set yourself aside. Understanding how this business runs, understanding the expectation in an acquisition process, knowing your financials, and not having unrealistic expectations about what a seller or broker is going to be able to do, and knowing that there's a number of different people who are going to have a hand in this process, and knowing that there's only so much that each party can do to move the process along, and how important it is that you do what's expected of you as a buyer when it's expected of you, to not further derail what is already a very long and drawn out process. All right, Josh?
Yeah, I think all of that is so important. And I think if you're already on this webinar, you're already starting the process and doing the right thing, because as much as you can educate yourself and prepare yourself in advance, the easier all of this is going to be. That's why we do all these webinars. That's why we have all the free content. So if you haven't already done the FedEx 101 and you're pursuing this space, that's where you should start. It's really quick and easy. You can jump on there right now, sign up for free, and be watching those videos. Watching these webinars are a great next step. But there are a lot of other things, like Danny mentioned. There's ways we can help on the consulting side. There's a new investor summit you can sign up for as a way to really learn about the space. But the more prepared you are as a buyer, the faster it's going to be, the less friction you'll feel in the process, and the easier this whole deal is going to be done. And ultimately, the better buyer you are, the better deal you're going to get. It goes such a long ways in making the seller feel comfortable, as all the things Danny's talked about here, to help them feel good about you and your offer. And oftentimes that can get you a better deal than, just offering a lower price. Sometimes the best thing for getting your offer accepted is the seller feeling comfortable with you. So that's what we wanted to focus on today. That's kind of a lot of the things that we wanted to highlight around the things that you need to have prepared and be thinking through in this process. And so we will get to Q&A in just a second. Lots of things to talk through there. And so as I'm going through the upcoming listings we've come out with this week and the new events coming up, any questions you want to put in, you can go ahead and throw in there, and we will get to in just a second once we've gone through this. So we have one new listing this week, and that is a line haul listing in Massachusetts. So it's 3 runs and it's $1.6 million. It's operating a really high margin, 28%. It's got 3 dedicated solo runs and 2 spare tractors and a full-time manager. So this is a really nice kind of starter size business. About 3 runs is a good size line haul business to understand, but it's also got a manager to help you on the operational side when you're coming into it. So if that's the type of thing you're looking for, and up in the Northeast in the Massachusetts area, this is a new one for you, and you can reach out to our team. We can give you all those details. A couple of events that are coming up, just want to make sure. So again, I mentioned it. We have these new investor summits that are specifically designed as courses to give you a crash course and everything you need to know about the FedEx space. And those are all digital now, and they're completely on demand. So if you decide that you want to go to one of those, we have it, and you can sign up for it right now. And then every couple of months, we're going to have workshops tied to those, where once you've gone to a summit, you're also eligible to come in person after that summit to follow up on everything you learned, meet the people, the experts who are a part of this space, meet the vendors that are a part of this space. It'll all be in our office in Nashville, and it's included with those digital summits. So if you're trying to accelerate your journey into the FedEx space, that's where you start. We are also going to have happy hours across the country. Danny just came from Atlanta. We were there last night. And those are always going to be free happy hours with food and drink, and a way for you to network with others in your area. And we've got that complete calendar listed for the whole year. So you can go ahead and look and see when we'll be in your neck of the woods. We'll make sure to give you a reminder as we get closer for each of these. But if you want to go ahead and plan on meeting us at any of those spots, again, you can go ahead and register. They're completely free to attend, and it's just a good way for you to meet us and to meet other contractors and other buyers in your area. Last one I'm always going to highlight is the Expo, which is our large contractor event that we have every year. And this year it's in Dallas. Again, completely free to attend. It's a huge 3-day event where we are going to have speakers, where we're going to teach you all about the space, everything new that's happening in the space, tons of networking opportunities, tons of, a huge expo floor where you're going to get to meet all these vendors, see trucks in person. The important thing, though, is that those hotel rooms, we have a hotel block on, and our discounted prices will run out. So the sooner you can register for hotel rooms, the better off you'll be from a price perspective, and to make sure you actually get to stay at the hotel. It's a Gaylord hotel. It's pretty nice. And if you have kids, there's a water park, so bring your family. It'll be a good time. You might find me at the water park too, but it'll be a good time. Okay. So those are the events. If you have questions on any of those, in the chat, we put links to all of those events so you can see how to register, see all the details about them. Now let's get to the Q&A. So this one's first around the FedEx contract. So new to PNG or PND, will FedEx grant the contract every year? Can you lose the contract? What does that look like, Danny? You can give some insight, and I'll jump in too.
Yeah, absolutely. So the beauty about having either an ISP agreement or a TSP agreement, be it PND or line haul, on the PND side, it would be an ISP agreement, an independent service provider. You retain that contract in perpetuity. You have sole exclusivity and first right of refusal to renegotiate those rates on an annual basis. And that process can be very simple, or it can get a little bit more complex depending on what your needs are for your specific CSA. But yes, FedEx will approach you, 5 to 6 months before your current rate table is set to expire, and they'll present you with 3 MESOs, MESO, multiple equivalent simultaneous offer, and you'll be able to choose between those 3, or even enter into a more formal negotiation if those 3 aren't adequate for you in a contract world. But as long as you're in good operating standards and you've not received an OTC or an opportunity to cure, then you will retain, like I said, first right of refusal and exclusivity on that contract in perpetuity.
Yeah, there are KPIs and contractual standards that as long as you're not in breach of your contract, you're going to be maintaining those exclusive rights. And those are the rights that when someone sells their business, they're selling those exclusive rights to operate, and that's why the interview process is there, is because FedEx wants to know who you are before they reassign those exclusive rights to you when you take over the business.
Right. It's not just the exclusive right to renegotiate, but a CSA or a contracted servicing area. You have the exclusive right to deliver FedEx volume to that area. So exclusivity up and down the contract. Absolutely.
That's right. Danny, what's the typical timeline from an accepted offer to closing? And this one's funny because it asks the shortest and the longest, and we can give you stories on both of those.
I think I might actually have the firm record for the quickest closing and the longest closing. So I can give you volumes of content on each of those. So from an accepted offer moving forward, as long as both parties are motivated and things are going well, 90 to 120 days should be your time frame in that regard. And that depends on the complexity of the deal structure, the financing side of things. If it's going to be a cash deal, or if we're going to have an SBA loan, or maybe a conventional loan or private capital, whatever that situation may be, that should be the ideal window from accepted offer to closing. We've done line haul deals via stock sale in as quick as 10 days. That was my record. And I've also had a P&D that took 3 different rounds of negotiation contracts, and it took upwards of a year and a half. That was also me, right? So like there's really, really fast deals and really, really long deals, but your goal should be 90 to 120 days from the time your offer is accepted to when you're standing up on that business.
Yeah, and really the variable things that can affect that timeline. One, how long does it take your contractor or your lawyers to negotiate back and forth? Yes. We can't control that, but as much as you can be prepared in advance to know what those contracts look like, what the APA looks like, so that you can move quickly, and use an attorney that has seen a FedEx contract before and knows what you're getting into there, is going to save you a lot of time and heartache. But that can slow things down. Usually pretty quickly after the contract, you're going to have that interview with FedEx. And then after that interview happens is a period of time where we're doing everything possible to push FedEx across the line. Oftentimes the slowdown comes from 2 places. Either FedEx has not done something on their end, some kind of red tape that they're just failing to push through, or the bank. The bank is often another slowdown, especially with the SBA, where if they need a particular set of documents, a particular set of updates, they won't fund the deal until that's done. So that can sometimes push that date back as well. So that time.
I was going to say, on the FedEx side, a big spot where we're seeing some things getting kind of log jammed is in the negotiations process. I think it's important, if we're going to talk about kind of setting yourself aside as a buyer, understanding that if the contract that you're looking to assume has a Schedule C or the compensation chart, that's what we were just talking about renewing in the previous question. If that has 6 or less months left on it when you're going into the purchase process and you've been approved by FedEx, there's a world where FedEx may say, hey, we want to go ahead and negotiate this contract now with the buyer, not with the seller. So again, as a buyer, making sure that you understand how those contracts work. We can help you on that with a negotiation support that we provide inside of our acquisition strategy plan. We'll tell you all about contracts and how those things work. Reach out to us if you have questions about that. But that's really on the FedEx side, the big one is if they're going to ask you to negotiate your own contract, you want to make sure that you understand how those contracts are going to be presented to you, what each MESO means, and how to project that out for your specific CSA, and whether or not you need to go into some sort of formal negotiation or unique characteristics negotiation with FedEx.
Yeah, that's perfect. I'm going to address this one quickly. Somebody said that they saw how FedEx had a lawsuit against us. Is that something they should be worried about? So it's a long. If you weren't here or party to that story a couple of years ago, basically that related to kind of us publicly speaking for the contractor base and fighting to make it a better workplace and change a lot of the conditions, and that's what led to that. That lawsuit's been thrown out completely. That was FedEx lost on that one. That lawsuit has completely been thrown out when we're completely fine there. And you really don't have to worry about any kind of lawsuit from FedEx unless you plan on going on a public stage and speaking against them in that way. So definitely should not be something you're worried about. It's been thrown out and summarily dismissed. So no worries there, but I just wanted to make sure to address it because I did see that question come in. This is one, and this is definitely right in your neck of the woods, Danny. So what can you do to motivate a seller to keep a deal moving forward when the transaction is stalled? And that is directly for you. What do you do, Danny?
What do you want me to do? I can't make somebody sell the business they don't want to sell. So the process with Route Consultant, right? When we're vetting new contracts that people are potentially looking to sell on the market, we go through an exhaustive process to qualify these businesses, to evaluate them and bring them to market. Once they're on market, life happens, right? A seller may encounter something where they had every intention of selling that contract as is and being quick about it. And then something comes up and they just don't have the time or the ability to go through things with the same level of diligence that the buy side of that equation does. I've encountered this very recently with some contractors that I've been working with. And, sometimes as a brokerage, we have to make the hard call to kind of stop marketing that business if we're just not getting the response that we need from the seller. We're going to do everything that we can to be respectful of everyone's time, efforts, and money that they're investing into this process. And if we have to pull the plug on something, then yeah, we'll do it sometimes. But I mean, the ultimate motivator is a well-qualified buyer with cash in hand that's ready to buy. So if you want to motivate a seller to be quick with their responses, be quick with your responses, bring as much cash as possible and show them that you're ready to be diligent and move quickly. And that absolutely incentivizes them to do the same.
Yeah. Yeah, I think it's very valid that sometimes we just can't do anything. I've seen a deal where the seller went to South Africa for 3 months and wasn't responding. So, there's things like that where it's like, although we are working to help sell the deal, we don't have the seller tied up in the back corner where we can, handcuff them and make them move forward on the deal. So there's things that we've done and we know how to motivate sellers. We know how to have the right conversations, but it all goes back to everything we've talked about today. The better you can be as a buyer, the better prepared you are, the more quickly the deal is moving, the easier everything is gonna move. Time kills all deals. So whether it's delays on your end or the sellers, the more you can do to keep the ball rolling, we'll be doing everything we can to push the seller. But the more you can prepare yourself in the process, the more likely these deals are to occur. But we're all running in the same direction, but sometimes there's only so much anybody can do.
And on the same note, when it comes down to it, for every unmotivated seller, as it would seem that you encounter, I've got 5 more that are really motivated and looking to make a deal work. And if you can buy into what we do on the valuation side, what our consulting team can provide to you as far as operational improvement plans, maybe there's something that sticks out about a business that you're like, I don't know about that. Just ask us. We've probably already come up with a solution for that, and we will find you the right partnership between buyer and seller. People ask me all the time what my job is, and I kind of joke, and I'm like, I'm the Cupid of contractors, right? I got to find the right buyer and the right seller, and all of the parameters that you've laid out as a buyer that, hey, I want A, B, and C. Maybe I can get you A, B, part of C, and then D that you didn't even think. Like, give us a chance to be creative and find that right partnership for you. And I promise you, there's a seller out there that we can work with that's going to hit all of the metrics that you're looking for them to hit. I can guarantee you
that. Okay, here's one from Nathan. I recently received a prospectus from RC. Will it be viewed negatively if I delay making an offer so I can attend the next new investor summit? So a couple of things. One, the nice thing is now New Investor Summit, you can watch it whenever you want. It's the content on demand. So if you sign up for that summit, you can do it right now. You can go watch that tonight, spend the night watching that, and then be good on the offer tomorrow. What I would say is, if you're delaying making an offer because you want to go through that content, That's okay. You can always make that decision of, I want to spend more time educating myself before I make a decision. We're not going to view you negatively for doing that. The one thing to just understand is that often you are not the only person reviewing a business. So if you're, you can always make the decision to wait longer, to be more educated, but just know that you're potentially giving up that deal if somebody else comes in and makes an offer on it. So we're not going to be judging you. We're not going to say, oh, you didn't make an offer, or we don't want to work with you anymore. It's just that you're not the only person looking at a given deal. So that could impact things. But like I said, it used to be that the New Investor Summit was only in person. And so that would delay when you could actually view that content. But now that it's on demand, you can do it right now. And you can use that workshop as a way to validate the things you've learned, to talk in person with a lot of these experts and vendors. But you should be getting the material and the content to be able to make those decisions as soon as you want it, as soon as you want to view that summit now.
And Nathan, I would say that at the heart of what I'm reading in your question, it sounds like there may be one or two things that you're looking to really shore up your education on before you commit to an offer. Bring that up to the broker that sent you the prospectus. Tell them exactly what your concerns are. There's nothing that says that we can't go ahead and get an offer on the table, maybe with some contingencies that insulate you from that one piece that you're concerned about. There's all kinds of ways that we can make sure that we keep that fire underneath the seller, that we keep you engaged in the process, that you don't lose momentum or lose your spot in line to another investor that wants to come in on the same deal. If there's something specific that you want to, make sure you're up on your P's and Q's regarding, bring it up to us. I'm sure that we can get you some advanced content if need be. We can talk to you specifically about it, and we can squash whatever fears you have there. Because if it's one thing that sticks out to you that you're concerned about, we can weed that out in contract language to make sure that it's something that doesn't bother you down the road.
Yep. All right, here's one. So in the last the last year, what's like the minimum and maximum seller financing for routes that we saw? They ask in the 1 to 3 million range, but I think it's more helpful a lot of times to think about it as a terms of percentage of the overall price, because I don't see a ton of fluctuation in the percentages based on the size of the deal. So Danny, if you want to jump in there.
Yeah, I mean, the first thing to kind of bring up there is that there's a number of different reasons that we're going to introduce seller financing into specific deal structures. So if it's a scenario where maybe we're just a little short on liquid capital at the, closing of the deal, but the finances are good and we can close the gap in cash flow, economics with a bank loan, so be it, right? And we'll take whatever percentage of seller financing is needed there. Typically that falls between 5 and 10%. But then there's other deals where we're going to make those work with, a combination of debt assumption, cash, and seller financing to really expedite the process and keep the banks out of it. And I've seen those go up as high as, 50 and 60% in the last year. And I've personally done deals in the past that were 95% seller finance, right? Someone just brought in 5% to the table, and the seller financed the rest, and it worked out fine for everyone. You should be able to expect about 10% per deal. That really is a baseline where I think if a seller is really committed to the process, they should be comfortable carrying 10% of the note. And a lot of times the SBA is going to say that they want the seller to have a vested interest in the process. So if you're going through the SBA, a minimum of 5% from the seller is more often than not going to be a requirement.
Yeah, I think that's exactly right. Those averages are what we typically see. We see crazy high ones, but I wouldn't expect that. It's usually when it's a really high percentage of seller financing, it's unique to that seller situation, or they may just not need cash flow and they care more about offsetting their taxes over time. They're good kind of structuring that where they get a payment every month. That's great for them. And so there's lots of reasons somebody will consider it, but that's kind of the way to think about it. You should expect some. And then depending on the seller and the structure of the deal, there's larger amounts that we can see. And it's always fair to ask. You're not going to offend anybody by asking. The worst they'll say is no, and we restructure around it. This is an interesting one. So top 1 to 3 conditions or terms that are negotiated between lawyers, which can potentially hold up a transaction. So you can give 1 or 2, and I'll give 1 or 2.
Yeah, I think a big one that comes up a lot is going to be non-compete language. That's one where a lot of times folks selling parts of their contracts are keeping another part of their contracts. They're staying in the network, but trying to diversify and capitalize on some of their equity to grow their business in other areas, right? So in that world, non-compete language really doesn't make a lot of sense. In fact, it's kind of nonsense. Like that's one that comes up so often that it's always a little bit of a bugaboo. Another one is depending on which lender you're using. Sometimes folks really want to have, route consultant maybe act as the depository account to avoid some escrow fees. And we can act in that regard in a lot of scenarios, but maybe the lending partner on the buy side wants a third party, and legal counsel is like, well, I can do it for free. Why can't I just do it? And then it becomes a whole thing. Escrow and non-compete language are kind of two bugaboos. Your best bet there is to not be super concerned about non-compete language, because it really shouldn't affect you in the long run, in any meaningful way. And as long as there's not a culture of people trying to poach drivers if they're staying inside that terminal, even that should be about as far as that goes. And when it comes down to, the escrow side, let's not let a couple $1,000s worth of escrow fees derail, $1 million deal. Just let's all keep our powder dry, as Coach Dave McGinnis of Tennessee Titans Radio says, and just keep that train rolling.
Yeah, a couple others I see. I think those are the big ones. But if there's ever any deal structure where there is some kind of escrow hold, where there's some amount of money that is being set aside and held in escrow after the deal closes. And oftentimes I see people put this in an offer. So maybe it's a contingency for inspections or title transfers, whatever it is, those always get really complicated. Anything that's trying to take care of an amount of money that will transact after the closing of a deal just always adds complexity. But the biggest one for me that's really painful, and it's why before I said make sure ideally you have an attorney that has seen one of these deals before, and you can go ahead and send them our contract template so they can review it. The big problem is when I see them add tons of language. When they come in, if you get a review and your lawyer's added 6 sections to the contract template that we typically provide, then you're in for a lot of pain, is because usually all of that context that they're adding are things that don't apply to the FedEx space. They just are contract lawyers, and it's things that they're used to adding, but don't apply here. And I see it all the time. And then it just gets expensive and takes forever. There's nothing you can do that takes a long time with an attorney that will be cheap. So that's the real thing, is if you can review our APA template in advance and even review it with your lawyer, that's how you'll be the best off, because that's the same one we use when we bought routes, and it's the same one we use in all of our transactions. So hundreds of lawyers have reviewed that template and use it all the time. So this is not me telling you that you should not use an attorney. You should use an attorney, but ideally you're not using an attorney that is adding a bunch of unnecessary cost and fluff to the contract. That's what slows things down.
Yeah, you could take our standard contract and run it through basically any deal, and it's going to hold up to any level of scrutiny. I've been through that document so many times for every single deal I've ever worked on. And yeah, I mean, going overboard with the red lines, it's just going to cost you time and money, and time costs you more money. So you're getting taxed on the money twice there, as far as I'm concerned.
Yeah.
Get you charges by the hour, not the minute, because they'll take advantage.
Yeah. This is a follow-up from Greg around the contract. So does he have to compete with other contractors on shipping rates? Is that fierce competition? That's not the way it works. As long as you have exclusive rights like we're talking about, as long as you're not in a contractual breach territory, then you will be the only person negotiating for your business. The only time you're competing is typically if you are trying to get a new, being awarded a territory. So maybe there's a new open territory at the terminal, and so there's 3 or 4 people who have all put their names in the hat. Then you might be competing on choosing one, but that's rare. Most of the time, and all the time when it's your contract that you have exclusive rights to, you will be the only person choosing between the options. There's no competition at all.
And on the rate side too, I think it's important to note that it's not even a terminal by terminal rate structure they come up with. It's CSA by CSA. The negotiations team in Pittsburgh and the regional manager, along with BDS or business development services, it's kind of like your HR with FedEx. All of them are going to take your specific CSA and delivery area and volume into account when structuring those 3 MESOs that they present to you. So not only is there not competition, but it should be a uniquely specific contract offering for your CSA.
Yeah. Quick one here about trying to see our consulting prices. So a couple things. One, if you're looking for any of our on-demand content or like the summit that I mentioned, in the chat, there's a link for the training.routeconsultant.com. That's where you'll find all of our e-courses, both free and paid. And then if you're talking about our true consulting packages, best way to do it is to reach out to info@routeconsultant.com. That's the email. It's also in the chat. And that way we'll be able to connect you and answer any direct questions, because there's different ways we can help. It's more about figuring out what you actually need, and then we can share any options there.
Yeah. Call me. I'll get you set straight.
Yeah, exactly. So quick question here from Don. How are express deliveries being handled in amongst the ground deliveries? Does the routing software account for the commitments? So first, to address, well, just a general thing for people who aren't aware, the express side of the network is previously FedEx was delivering through their own corporate employees, and it's been rolling into the ground network over the last 6 months to a year in different places, and it's continuing to happen. It's not out everywhere. And those have different time windows you have to make deliveries by. And DRO, which is the FedEx routing software, is okay at best at this. But I will say some of the larger vendors, that help on the routing and navigation assistance side, like Ground Cloud, all have capabilities built in. I know Ground Cloud was working for a long time on it, and has a lot of that technology built in. But that does just add some logistic complexity to the day of just having other time commits. And you mentioned a noon commit. The earlier your commits are in the day, the more complexity it's going to add to you. So if you're evaluating a route, it's important to ask that question. Hey, what does your express volume look like? How much has it changed the day? If you had to add any routes, has anything changed around your efficiency once you had to add express? Because it's going to look different across the country depending on what their volume looked like before, how much express they got, how early they have to make time commits. So lots of complexity that there's going to be some nuance there. And so whether you're asking us to evaluate a particular one or you're speaking with a seller, there's some questions you need to ask to get some more context. Question here: what percentage of deals are SBA financed? At least you can give some anecdotal evidence there, Danny.
Yeah, I don't have the numbers right in front of me, but I'd say, the SBA has become the predominant lending partner that we use. We have a preferred lender through GBank. We're happy to intro you guys to them if you need help on that front. But I'd say probably 50 to 60% of our deals are probably SBA financed right now in one way, shape, or another. And of the deals that we have going through a bank, probably closer to 80 to 85% of them are SBA, not conventional.
Yeah, I think most people are at least considering SBA and try to at least see if it's an option. And I think that's always completely fair. But yeah, a good percentage of our deals are always, usually at least 80% of our deals in a year have some amount of financing. And then depending on if it's SBA or not, I'd say the majority of them are at least SBA. Then here's a quick one I want to make sure we talk about from Ami. So can you explain BDS? They're a contractor and they have a contractor-wide meeting with them tomorrow. So Business Development Solutions, BDS, if you've never heard of them, there was a time that BDS used to be called Contractor Relations, and they really were closer to being Contractor Relations, where they acted more as a liaison between you and FedEx and really did help probably more than I would say they do now. You can still think of them as kind of like HR for FedEx in some ways, where they're there to hear certain things about the business, explain certain things. I would view them as a resource, and no matter what, it's good to build relationships, especially if you have them in your terminal. Do everything you can to make sure you introduce yourself. Because what can sometimes happen is if you have a problem with your terminal manager, if you know anyone in BDS, they can sometimes be a workaround, a way to help resolve situations that you feel like you're hitting a brick wall with your terminal manager, especially if you happen to build a relationship with anyone regional, a regional BDS representative. They can often go and resolve things for you. It's really important to also be aware that if there's something that's happening between you and your terminal manager and you go to BDS, your terminal manager is going to find out about it. So while BDS can solve those things for you, just know that it will, if there's any friction there between you and the terminal manager, it's probably not going to lessen. So if you go that route where you're going around your terminal manager, you got to make sure that it's going to be a good scenario for you, and that it's necessary to take that step, that you're really up against a wall that much with your terminal manager. But ultimately for the meeting tomorrow, I would focus on, here, if there's a specific topic great, hear from them, but your goal should be to meet them personally if you can, and make sure they know your name. If you can get their contact information, even better, and try to cement that relationship. What factors does FedEx use to determine if they want to renew a contract at the end of term? And how long before the end date is that discussed?
Great question. Yeah, great question. Sorry, Josh, I thought you were asking me. FedEx doesn't have like a determination process at the end of a term, right? As long as you have met your contractual requirements, as long as you're in good standing with your contract, you have the exclusive right to be presented those renegotiation options, those MISOs, bar none, right? They, if you have an OTC, if you have breached contract, that doesn't even necessarily mean that you're going to lose that first right of refusal. It just means that FedEx is going to present you formally with an OTC and say, here's the problem. You have, 60 days to fix the problem. And then, we'll lift the OTC and you'll regain exclusivity again. So there's nothing specific FedEx is going to look at. When they go to, give you your MISOs 6 months ahead of your contract renegotiation stand-up date. So, let's just say that your contract was set to expire July 4th of this year. Right about now is when they would be presenting you with your MISOs, right? So you can review those. What FedEx takes into account for those are going to be the specific operational expenses and the trends in your CSA. So they'll look at things like recruiting costs, the wages that you're paying your drivers, your fuel, major construction, growth in the area, things like that go into account. That's why I say they take it CSA by CSA when they renegotiate that. It's very, very much focused on your specific operating area when they give you those options.
That's right. And the other thing too is there's a medal system now for P&D, not line haul, but for P&D that helps you see whether you are in danger, essentially. So there's a bronze, silver, gold rating, and if they'll also tell you which way you're trending. So you could be silver trending silver, or silver trending gold, or silver trending bronze. And if you end up in that bronze category, is when you know that you're in an area where you need to fix some problems before contract renewal time, so that you can basically get back in good standings. But they'll tell you the areas that you're deficient in, so that you can at least know what you can fix. And then the important thing too for all of you, as long as you're not doing a stock purchase means that you buy the entity, not just the assets. But as long as you're doing an asset purchase agreement, your things like your safety and your metal status, all of that will reset and you'll start fresh. So when you're evaluating a business, it's important to understand that history so that you know what you're getting, but you'll always get a clean slate to start with, as long as you're not doing a stock sale. Here's one. What's the average tenure of drivers, and how do you keep them motivated?
Yeah, I tell people all the time, the average lifespan of a FedEx ground delivery driver is about 18 months. And if you get 18 months out of them, you've gotten your money back on the recruiting costs for sure. It is a hard job. And those people do not get paid enough, and they don't get appreciated enough for the work that they do, because it's difficult and it's hugely important to our economy as a whole in America. But the best way to keep your drivers motivated is to keep them comfortable. I mean, you pay on the higher end of what the averages are in your station. That's a big way to keep them happy. The other thing is, people will make the argument about benefits and health insurance and life insurance and all. The majority of drivers that have that available to them don't take advantage of it. Things like having a newer vehicle with a better stereo and air conditioning that works in the hot summer days, or, heat that works well in the wintertime, so these guys are comfortable. They're spending 8 to 10 hours a day in their truck, right? If they're more comfortable in their truck, they're more incented to stay in the truck. Things like that, simple things where you treat them with respect, you have a culture of consistency inside your business where they know and expect, the same thing day in and day out, and you're not throwing them curveballs all the time. And, things like that will help keep them around. But you should never expect to have a driver more than a couple of years, unless it's someone who really is well adept at the space and you intend to grow them up, maybe as an assistant VC and then your VC. Those types of people are rare, and you should hold on to them when you find them, because they're hugely valuable to your organization.
Yeah, a lot of times the ones you'll see that have the most tenure are managers, because they started as drivers, they've grown, and that's how they've stayed. You'll occasionally find people that are, this is the career they want. And that's what they've been doing for a long time. They don't want to change. I'll say that you encounter more of those career type mindsets on the FedEx line haul side than the FedEx P&D side. You're more likely to have those that are staying around for years. Just the nature of the job on the P&D side, it is harder, it is more physically intensive. And we see more of the, either seasonal or drivers that are only that, they don't really know what they want to do next. Maybe they're not viewing it as a career, but as just the next thing. But you will sometimes have career P&D drivers as well, especially like Danny's talking about, if they're the type that want to be, nurtured and groomed and become managers and grow from there. So that is it for questions. So again, I really appreciate everyone being here, asking all the questions, and that we can always continue to come here and learn from each other. Danny, I want to thank you for being here, even though you were in Atlanta yesterday for the happy hour. You still made it for the webinar, so we always appreciate that.
My pleasure. I love doing these things. I drove straight from the hotel this morning. I had to be here with you guys.
Perfect. All right. Again, if you have any questions, info@routeconsultant.com is the easiest email. And in that chat before I sign out, that's where you'll find some of the links. But training.routeconsultant.com has a lot of our digital courses if you want to learn from there. And for everybody else, thank you so much. And we will see you next week at the next webinar.